Now available on Tata Sky channel number 526.
Hello and welcome. You're watching Property Hotline on Magicbricks Now. This is India's first property channel. I'm Kavita Krishnan. Today we are answering all your home finance related questions with Kartik Jhaveri. Kartik is the founder and director of Transcend Consulting India Private Limited. He joins me in the Mumbai studio. Kartik, welcome to the show.
Thank you.
Let's get started with an email query first. We have SS Verma who's written in. Now, he says that the principal repaid as EMI is tax deductible under Section 80C. He wants to know if the principal returned as partial payment, is that also tax deductible?
Oh, absolutely. I mean, whatever principal repayments you are doing, as long as you are doing principal repayments, which all falls under the aggregate category of 80C. So, technically, just assuming that you have no other deduction under 80C and you have paid your principal or repaid your principal partially or via the EMI, as long as you are within 1,50,000 or even if you've paid more, 1,50,000 is all your deduction that you will get. So you can enjoy it completely, whether via EMI, whether separately, whether multiple times you pay extra principal repayment back to the bank, whichever way you do it, as long as you're within the 1,50,000, you'll get your benefit.
Okay, so you are eligible for that benefit there under Section 80C. Let's move on. We have a question that's come in on our website, www.mbnow.in. Vinay has written in and he says that he has an income of 22 lakh rupees per year. He's 32 years old, Kartik. He's unmarried and currently repaying an education loan that he had taken for rupees 15 lakh. The EMI on this loan is 30,000 rupees. Now, he has completed 2 years of payment, is left with another 5.5 years. How much home loan is he eligible for currently? He's already paying a very expensive loan over there. How much home loan can he take, or should he take a home loan to begin with?
Well, I mean, that frankly is a factor of whether he needs to have that home or not. If it's an investment, then, we can think about other alternatives for the time being. But having said that, education loan also he's getting a certain amount of tax benefit. So let's not sort of completely overlook that. So that is one benefit which is already there, and you have to obviously repay your education loan. It's quite a responsible thing to do as well for him because he's paying his own education loan back. Now, moving on to property. So first, let's just understand the basic mathematics of this property loan, how it works and what you need to do. So the amount of loan that you're going to pay is directly obviously related to your repayment capacity, which in turn is dependent on your income. Now, 22 lakhs of income, so let's say we're assuming an income of close to somewhere in the range of approximately about 1,80,000 or so per month, which means the banks would ordinarily very happily allow him to pay an EMI of somewhere in the range of about, say, 80,000 to 100,000, 70,000 to 100,000. That's a very broad range that I'm taking. Assuming that he's a young person, even if the bank allows him, say, about 90,000 rupees of EMI, but out of that 90,000 EMI, 30,000 is already servicing an education loan. So which means as of now, 60,000 rupees is something that the bank would most likely, in my opinion, allow him to pay. Now, what that 60,000 means is that he will get 60 lakhs of loan, because the ballpark calculation that we do on a loan which is about 15 to 20 years of tenure and which is available at about 9% to 9.5%, the EMI for that kind of a loan works to 1,000 rupees per lakh of loan borrowed. So therefore, if you have 60,000 repayment capacity, then that means your loan is going to be somewhere in the range of 60,000, 60 lakhs,
Kartik,
and then the bank might give 70.
Kartik, you just said that the bank will, assume that he can pay around 60,000 rupees of EMI and give him a 60 lakh rupee loan.
That's right.
Now, that is what the bank says that he's eligible for.
Correct.
But, if you look at it in a very, from the point of view of financial planning and how you should really be planning your money over here, 22 lakh rupees income per annum, he already has a loan. How much can he really, how much of this can actually go as loan EMI? Ideally.
That's a fabulous way of looking at things. We obviously say that you should not try and go beyond about 20 or 25% of your income for repaying a home loan. And all your loans put together cannot exceed about 45 to 50%. And these kind of ratios are completely acceptable when you are just about starting your life or you are in the first 10, 15 years of your career, and which is exactly in. So which is where if he spends about 50% of his total income paying EMIs, then that's okay. The bank or the institution might even give him a little more, but then we would have to control our requirement right now and stick with that, because simultaneously we also want to start planning for retirement and all the other life goals that we may be having. So I think it's a great perspective that you've put in, and therefore 60,000 of that home EMI plus 30,000 of education loan, say about 90,000 to 100,000 is fine, because from the rest of the money he will still be able to save about quarter of his money. Of course, we are not considering taxation here, but he'll still be able to save a quarter of that. Some money will go in taxation, and the rest of it, some about 30,000-40,000 might even go into his living expenses, or probably even lesser, considering he's a young person right now.
Right. So that's a key takeaway coming for you there on Property Hotline. If you are in the early years of your career, you can afford to pay around 40 to 50% of your income in EMIs. But remember, this is EMIs for all the loans that you have taken, which includes, it could be a car loan, it could be a home loan, it could be a personal loan even. So you need to ensure that all the EMIs that you're paying is not more than 40 to 50% of your of the takeaway, that is the income that you take home, and not your CTC. Moving on, we have Prabir Datta, who's dialed in from Howrah. Prabir, how can we help you?
Yeah, good evening. This is Prabir from Kolkata actually. And I have a question. I have two questions. Good evening, Mr. Kartik.
Good evening. Hi, Prabir.
Yes, I have recently taken a loan from SBI.
Okay.
And while processing the document, some official told me that you need to do SBI life insurance and general insurance for the protecting the home and protecting the loan. Then I asked them, is it mandatory? They strategically just avoided my question. They said it's a guideline. So I need to know whether it's mandatory or not regarding that insurance, life and general insurance. Second question is that it's a reducing interest rate that is fluctuating. So I have applied that time, it was 9.5. Recently I came to know that the government announced it is getting reduced to 9.4. So what is the actual process to get it reduced officially? Because I asked the question to the officials, they said, I don't know, we need to wait for the circular, we will be informed. But I'm just wondering. So if you can help me to shed some light on these 2 points. I really very much
Prabir, have you written to the bank asking them to reduce the interest rate on your loan?
No. I've just verbally asked them by phone and meeting them. So what is the process actually? I just need to know. You will kindly help me.
Right. So 2 things coming in over there. Let's deal with the the interest rates first. Now we know that RBI announced the MCLR formula. Banks have taken to it, and in fact, SBI had announced its rates as per MCLR. It is around 9.4%, like Prabir rightly pointed out. How can he get his home loan shifted to that interest rate?
Okay, the first thing that Prabir and all the other people, all our other viewers should understand is that the MCLR system is going to be now available to people who start taking loans post 1st April. So it's not to retrospective loans, it's to the new loans. Okay. Now, because of this new system, you have the option of migrating from your old floating rate system or fixed rate system to this MCLR based system, for which the banks might have a little bit of a fee that they might charge you. What you must also understand is that what happens in the RBI, what happens in the Reserve Bank, they make a policy announcement. By the time it actually translates to the absolute branch that you are dealing with, it may take some time. Well, technically, we should not give them the leeway, because if a policy measure is announced, it has to be implemented immediately. But well, we give a little bit of latitude based on practicality, and then it might take a little bit of time before people understand it and the messages come down and people start implementing all of that. So therefore, one of your ways, like you've been saying quite rightly, that they themselves are in the dark, so how will they try and advise you? Secondly, write to them, see what happens. MCLR also will get settled down in a little while. They may allow you to migrate to MCLR, but you might have to do a little bit of conversation. That is a little bit of discussion with the bank on that. And see, moving on to your other question about the insurance component. Now, here it is very pertinent to note that when you are getting a loan from a bank or a non-banking financial corporation, they have the freedom to make a few rules. So if you ask me, in my personal opinion, there is no need to have any insurance whatsoever. The reason for that is very simple, that when you are taking a home loan, you are giving your home as a guarantee itself. You are giving that as a security or as a collateral. So God forbid if something happened to you, they already have possession of your property and they have rights to go ahead and sell it also if the need may arise and then recover their money. But you see, they don't want to do that. No bank wants to really go and sell you a home loan. All they are interested in is that their loan should come back and that their loan should not get defaulted on. So what happens is, as a via media, they get a life insurance contract. It's a very popular thing. It happens all across the world. So this is nothing new. So what they want to do is, God forbid if something happened to you, the liability should also not fall on your family. It should also not fall on your other savings and assets. And which is why it's a good idea that if you have a life insurance policy equal to the value of your home loan, so that God forbid in any eventuality if something happened, the insurance company would straight away pay off the loan and your family would be
what
relieved.
he's telling here essentially is, you know what, RBI has been repeatedly pointing out, and a lot of consumers have also complained about the fact that banks tend to try and sell another product when they're selling one product. This is technically called mis-selling.
Mis-selling, absolutely.
Yeah. So, does he have to buy this product from SBI? Can't he just go out and buy a term insurance somewhere else?
He can absolutely buy term insurance, and if he wants, there is also a facility in life insurance companies which is called an assignment of policy. So if the company is absolutely insistent that they will just not give you the loan till the time you give them an insurance policy or buy one from them, you could actually buy your term plan from whoever you want and have that policy assigned in the favor of that institution, so that the bank has adequate or double security, your loan, your property plus this insurance.
Kartik, we have another caller on the line, but before we go there, quick question. Is it cheaper for him to buy this insurance from the bank itself?
Not necessarily. Online is obviously going to be the cheapest. Any agent selling it to you is going to be like a little bit more expensive because there's a commission involved in that.
Right. So go ahead, do your Prabir, you need to do some homework over there. Check out the insurance policies available. If you want to take an insurance, you can always opt for a term insurance which will cover you and ensure, by way that your home loan is also covered. So you can go for the term insurance, but you need to really go and check for the cheapest policy available and the best policy available in the market. You need not buy it from the bank. Let's move on. Anil has dialed in from Mumbai. Anil, how can we help you?
Well, there are two questions. One is I would like to go for top-up loan. And the question is we have booked one flat at Andheri West, which is the Mara redevelopment building. So it is, stuck due to non-CC, for non-further CC. So it is the construction is stopped from last 2 years. So what can we do? Means when we can get the CC from through MADA or BMC? Can you help me out, or can you just throw some light?
Okay, about getting the CC from MADA and BMC is another question that we will have to answer another day on this particular show. Today, Anil, we are answering home loan questions, and that's what Kartik is an expert in. So, Kartik, he wanted to know about top-up loan. Is he eligible for the top-up loan? How can he apply for it?
See, top-up loan is a great facility which a lot of lenders have. They give you the top-up loan because obviously they earn a little bit more interest on that, and it's a great facility for us because we can use that loan for a variety of purposes. Understand that this top-up loan is paid to us directly and not to any builder or developer or any third party, you see. Now, the top-up loan depends on about 4 important factors: the value of the property, the outstanding loan that you have, your income, and obviously your repayment capability, because all these 4 things will have to play together. Because when you're taking additional loan, automatically your EMI is going to rise a little bit because you'll have to pay a little extra EMI to sort of compensate for that loan that you've got to repay the bank. So therefore, these factors become important. Also, the fact that if the property has gone up in value, then your 80% component also automatically rises. To give you an example, if it is a 1 crore property and you've already taken 80 lakhs of loan, then you want a top-up loan, not possible. But if the property itself moves up to 1.5 crores after 5 years of valuation, by the time your loan is, say, about 70 lakhs, then if you want a 10-15 lakh top-up, it's possible because you'll still be within the 80% kind of a framework that the banks would like to operate in. So in that sense, your top-up loan would be a workable idea. And what's the procedure for this? Now, the best thing to do is to go to the same person who has given you that original home loan. The reason for that is because your original documents are sitting with that bank or that non-banking company, and therefore that is the most obvious lender or the obvious choice of lender for you. Go to them, apply it. There's obviously a formal procedure. They will do a due diligence again based on your repayment capability, on your income criteria and all of that. But having said that, it's a very easy loan to get, and they'll be most happy to lend it to you. If they've already lent you a larger component, a top-up loan is something that they would be happy to lend.
So that's your top-up loan question answered, Anil. And like I told you earlier, I promise that I'll have someone from my team call you and ensure that your other question that you asked is also answered on another edition of this very show. Moving on, we have P.N. Krishna Kumar who's called in from Bangalore. Mr. Kumar, go on. Tell us what's your question.
Good evening. This is Krishna Kumar calling from Bangalore. And compliments to the channel and compliments to Fire D'Souza and Kavita.
Thank you.
I'm a 43-year-old Air Force officer. I'm buying a 3 BHK apartment for end use. And I'm availing a loan of 45 lakhs. The bank is insisting on taking a home loan linked to life insurance policy. However, I am adequately insured and do not find any need for further insurance or as a end use. My question is in 2 parts. Now, considering that I am adequately insured, along with a lifelong pension available to me and thereafter to my wife in case something happens to me, should I take an additional life insurance linked policy to my home loan? Or secondly, in case if I had to take a home insurance policy, what kind of policy should I go in, whether term insurance or a term insurance linked with a maturity benefit?
Krishna Kumar, we just answered this question on the show. However, no harm in answering it again. This is something that every customer, every borrower out there who's going in for a home loan needs to know. Kartik, he's also given you some options over there. What would you suggest he goes for?
So first, let me eliminate the option that must definitely not be considered. Which is the last thing you said, Krishna Kumar. The last option that you mentioned is, should I take a policy which has got added benefits? Now, let's understand one thing, that whenever you're buying an insurance contract or an insurance policy, so to say, any additional benefit that's going to be attached with it, it's going to come at a very steep cost as well. So that's obviously not in your interest. Now, coming to your specific situation, you're already saying that you're absolutely adequately covered, and which is why you don't see a need to cover. But you see, a lot of times, a lot of banks would just not give it to you till the time you don't do that. So then in that case, what's the best bet for you is you still have an insurance cover, and maybe you have a standalone term life insurance cover. And then you could also probably, break it into smaller parts, and based on the requirement or based on the outstanding loan that you have, say maybe 5 years down the line or 8 years down the line, you could maybe decide to discontinue some of those policies also. Because the way these policies work is, if you don't pay the premium, then the policy lapses, but you are here deliberately lapsing. So because your need for life insurance has got over at that point of time. So you may want to consider doing something like that. But having said that, sometimes these options are something that you might want to do. But sometimes buying a single premium to do the whole loan, or buying that life insurance which is linked to the home loan and things like that, again would depend on the contract of that bank in concern, that whether they are happy to let you buy your own plan, and then whether they'll be happy to entertain you based on the fact that you have your own plan. And if something happens, can they have an assignment of the same plan in favor of that particular institution, so that from a security point of view they are secured, and from a mis-selling point of view we are secured that we have got the product of our choice.
So essentially, Krishna Kumar, it's about keeping everybody happy. But like we keep telling you on this show, financial products, though you have the banks and you have NBFCs selling you these products, you need to, just like when you're buying a house, please read the fine print before you buy a financial product as well. And also remember, you do not need to buy that insurance policy from the bank. Question that's coming on our website, Vivek Gupta has written in from Lucknow. And he says that in 2009, he bought a home in Pune for 23 lakh rupees. He took a home loan from SBI with an EMI of 21,000 rupees. He currently has enough money to prepay this loan. He wants to take a loan to buy a property in Lucknow itself worth 45 lakh rupees. Should he prepay this previous loan that he's holding and take a new loan? Or should he use the money he has in hand to make the down payment and reduce the loan amount for the new property? I think it's a call that he needs to take, but what would be financially prudent?
Mathematically it works out to the same thing, isn't it? So I have this X amount of money, either I reduce my liability here or I create a liability there. Either ways, the total amount of liability is going to be the same, whether it's on one property or two properties. There's nothing that stops you really from having 5 properties or 10 properties or as many properties as you want and pay the EMIs for all of them. However, for the benefit of everybody else, it's important to remember it is only one property, which is your self-occupied property, or whichever you consider to be your self-occupied property, is that property on which you're going to get your tax benefits. You don't get tax benefits on everything else. All the other become your deemed let out, and then there is a different working and calculation that happens on that. But having said that, Now, what is the financial sort of wisdom in this whole thing? So my opinion is the strategy that you should use here is neither prepay or, go ahead and, just use that money for your down payment to the extent required. Don't use all the money also and try and take a lesser loan. Now, we are making a very simple assumption here, as we understand from this question, that you have the affordability to pay the EMI. Now, home loan EMI is a good EMI to pay because your asset itself is appreciating in value, and at the same time, the rate of interest that you are paying on your home loan is way lower than the rate of which your asset is moving up. So example, your asset might be growing at 12%, 15%, 18%, depending on what asset you've bought, where is the property. But your loans are somewhere in the range of about 9 to 9.5% in today's market. So therefore, it's obviously a, faide ka sauda kind of a situation. So now, having said that, my suggestion is do not prepay the old one, continue that. Pay only the amount that you require for the new property. Go ahead, take your loan for the next property as well. Invest that balance surplus that you will have. Grow that money into equities, and whatever profit you make, use those profits to make prepayment. That way you'd be, enjoying the money, you'd be having your cake, you'd be eating it too, and you'll have two properties, you'll be able to manage both the EMIs, you'll be able to make your regular prepayments by the profits that you'll make there. Everything will work out, and all of that is tax-free. I mean, all the profits from equities are tax-free, remember. So.
Right. So that's another thing that you can do with all the money that you have over there. And like Kartik said, enjoy your cake and eat it too. Let's move on. Let's take another question that's coming on our website. Meena says that her father has a flat in Mumbai which is mortgaged. Now the property has a loan of 13 lakh rupees on it. Her father died, but the loan had to be paid by him. Her sister is the legal heir. There are 5 siblings. Only her sister has a right to settle this loan, but she is not capable of paying the loan back. They have managed to find an outside party to repay the loan. Now, they've asked the outside party to deduct the loan amount and give them the remaining amount. Now, she wants to know how the documents will be made in this aspect. She also asks what is the procedure. Since the property technically doesn't have an owner now, the property does have an owner. Her sister is the legal heir. So, she becomes the owner of the property, right?
Yes and no, not automatic, however. And there is an anomaly in this whole thing. Only she has the right to settle this loan. I mean, I don't actually understand this. Maybe what the other siblings are saying, because you are likely to inherit this property, therefore you might as well settle this loan. Therefore, it is your responsibility. It's not that only she's capable. The others can also do it. But, putting all the family things aside, let's really understand. So when a person goes away, if the person has made a valid nomination, then the society or the association can transfer the certificate in the name of the person whose nomination is recorded in the society. So that's one of the prima facie rules. So go ahead and do that anyways. Also remember, now the fact that the property in the eyes of the society, now you are having a new member, that does not mean that the title has actually transferred to you. The title documents need to be transferred to your name in the office of the registrar. And for that, what you may want to do is, you might want to consider doing the probate or getting the letters of administration, depending on whether there is a will or there is no will. So if there is a will, then we need to get a probate so that the property technically moves to you. Because remember, you're going to sell it. Now, if your buyer is going to take a home loan, and that, not in this case, but again, in case of generality, when the buyer is going to take, he will want to do a title search. In the title search, the property will still be in the name of the father, although you have inherited it. So therefore, the probate is necessary. So therefore, the property cannot be sold till the time there is an owner of the property. So we know that one of the daughters is the owner, but then it has to come to her name, and that has to follow a proper procedure. So society procedure 1. Second, you have to follow the procedure of getting a probate or a letter of administration if you don't have a will, and then the property will move to you. Then at that stage, when the property belongs to you, it's at that point of time where you can do any sort of an arrangement with somebody saying that, look, I have an outstanding loan, you pay the bank, and then you pay me the balance and things like that. It can't happen at this stage. Unless, of course, it happens on a friendly basis that this loan is given to you with at some interest rate and so on and so forth. So informal arrangement possible, legal arrangement will follow its own due course.
So essentially, you need to get your ownership papers in place. You need to get your title papers in place. Once that is done, then you can go about, getting a third party in to pay the loan, or you can sell the property and pay off the loan. That's a call that you need to take. But first, you need to get this in place, because even a bank is not going to touch you otherwise. Let's move on and take an email query now. KM Shah from Mumbai has written in, and he says that he has taken a home loan from a bank. Date of loan disbursement is March 29. but the check was prepared on April 2 and was handed over to him on March 5. Now, the bank is charging him interest from March 29. Which date should the bank technically charge the interest from? The date of disbursal or the date of issue of check? Now, that's a very, very proactive, borrower over there, and I think he deserves an answer. What do you say, Kartik?
Absolutely. So, technically, the day of disbursement and the day of issue of the check should be the same. Now, irrespective of when you choose to take it and when you choose to bank it is a separate matter. So, the computer of the lender will start calculating on the date the check is printed into the check printing machine, which is going to be the date of the check. But then, it has to be disbursed. Now, why was there a difference between the time that it was printed and disbursed? Perhaps it is to do with something that, Mr. Shah went late or something happened and, he didn't get the check in time, whatever it is. So now, this is not such a big deal, you see, because all these systems have the functionality where there can be a manual intervention. So if your case is genuine, if you are, happy to do a little bit of discussion, maybe follow up once or twice
so
with the
essentially,
institution.
Follow up with the bank. Follow up with the bank.
Follow up with the bank and it could work out.
Follow up with the bank and work it out. With that, it's a wrap on this edition of Property Hotline. Kartik Jhaveri, thank you very much for coming in. Keep sending in all your queries related to real estate. You know that it's not just home finance. We answer questions on property taxes, on legal issues, also on buying, selling and investing in real estate. It's our promise. You send in your questions. We'll get the country's top experts to answer them. You can reach us on the IDs that are flashing on your screen. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/MagicBricksNow. And don't forget to click the like button. You can also follow us on Twitter at MagicBricksNow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/MagicBricksNow.